Let me. Okay, I can see. Who is raising? Okay. How's that? I'll make you a host. So please. Let me see. Well, okay, so as a coach, you can share your screen. Confirm if you can share your screen.
Okay, let me get the document out.
I thought you have it handy. Please, anyone who has his own handy and is using a system, would please indicate so that we save our time. Because the reason is that I won't be able, I have to be doing other things. I can't be flipping through screen with you guys all through.
Yes, I understand. That's
Any other person? You guys can just mute now and just talk so that I can make the person impose. There's not much time for us.
I have it, but I'm just trying to put the password. You know, it's password.
Password just every 6 letters. It's something that is easy. Okay, I can also share the password guide if I find out to you so that. I hope network is good with us tonight and there's no disturbance. Is it the password that is the challenge? Hello. Hey, Askia.
Yes, it's the password.
Can you see my screen from here?
Now. Yeah, you can see
It's
it, but this phone will not be effective. To be so small. Is Apex as Mr. Ozan, share your screen first. Let's see that you have it open now. Just share your screen first.
Okay, let me share my screen first.
It's not time, it's not ready.
I can't share my screen. It's not sure giving me okay.
You should be able
so
to.
there is a 3 dots. Are you connecting with your phone or laptop?
Laptop.
So if you check, there is an arrow up that moves up.
Okay.
So there's an arrow that moves up. So click
present
on the
now,
arrow.
right? Present now.
Yes.
Then I go to Windows.
You may want to share. Okay, you can do Windows, you can do entire screen, whichever one you like.
Let me do entire screen.
Yeah.
Okay. This show you that.
Okay, show you now. So do the entire screen. So just move us straight to your stuff there. If it is tax, you don't need to close it because I will still make reference to that.
Okay.
We are capital letter A at 2023.
Okay, so let's just move straight to digital economy.
You can do Control F.
Just press your enter that way. Just do enter. Enter again. It will take you straight to where it is.
It
Yeah,
will
that's
take you
it.
there. Just take it. That is fine.
All right.
So you can
So that
zoom your
makes a
screen
lot
out.
of sense.
Let's see.
Yeah.
Is it okay?
Yeah, it's
Zoom
okay.
it
It's
out.
okay.
It's fine. So you can zoom it a bit too big so that at least you can view a whole lot. So I've also shared the Pathfinder in the group in case you guys want to use
Okay.
it. And the past question guide, let me share it.
Should I also open the past question guide?
No, not necessary for now. So when
So you
it's
can
time, I will
start.
make reference to it.
Okay.
All right. So we're
No.
good.
No.
All right.
Will
Thank
I
you
start
very
the recording
much.
all over? It's fine.
Yeah. No. We can move on from this. Anybody who wants to make recourse to recording will be patient enough to get to this extent.
Okay.
All right. All right. Thank you very much. Again, apologies for that 1 hour break. I mean, we've been brainstorming on the best way to ensure we get the best across to you. Actually, I'm now beginning to see possibly it's a blessing in disguise because left to me, I wouldn't have done the theory topics at all. My intention was just to do the competition part of it, part of the course. But now that there's time for us to do the theory, and besides, your exam is 50-50. So I think there's need for us to address how you are going to write in your exam. So that's something I addressed a bit of it in my first class. So I will address the latter part of it in this class as we move to the theory topics. There are 5 to 6 theory topics that you must know, right? Because they are most likely constants in your exam. And if you look at it, it's hinged on 2 things. It's based on the fact that it's now global world. So anything IT related is highly examinable. So that makes this topic very much examinable at your level. But at the same time, what the examiner is going to be examining at your level is application, right? So there's a way you write that you make the examiner understand that you know how to solve problems and how to be able to solve problems basically. So at this level, it is application. So when the examiner is asking questions, the examiner is expecting that you prefer solution to problems, right? Is expecting that you prefer solutions to problem. Mr. Victor, can you click on hide? Yeah. So he's expecting that you prefer solution to certain problems. This topic, I'll use this also to connect with some other topics. So at the end of the day, I might end up doing like 3 to 4 theoretical topics. And at the end of the day, we are still going to discuss. It's a long class. So we have to interact at the end of the day. You have to ask questions and all of that. You have to give your opinion. But then let me sound this warning very clearly. It's a warning. Actually, it's a warning. All right. It's a warning. The warning is 1. Don't overly concentrate on the theory. If you answer the theories and leave if you leave the computations and leave the theories, the writings, you may be shooting yourself by the leg. Number 2, is that your writings is what you need is basically an idea of the topic to scale. What you need is an idea of the topic to scale. I can say for a fact that you can reason through if you understand the idea behind the topic in your exam, meaning that at your level, you need not cram anything at all to pass your exam. You don't need, it is not necessary at all to cram any topic, right? Before you can scale, you don't need to cram anything. Now, let's go back to digital economy. What is digital economy? Digital economy is just saying that now the world is becoming global and IT is being incorporated into the practices, including tax practices in Nigeria. And before you can say there is global economy, right, there are 4 things that must be incorporated in your business, right, or in anything you're
Sorry,
doing. Number
Michael,
1 is that them.
sorry for the interrupt.
Yes.
Yeah, mm, Mr. Victor, digital economy is highlighted because has not been cancelled. So just go up and cancel that 3 over yes. So continue.
Okay, thank you. Thank you. So I was saying that so for digital economy, that's where I am. So the 5 topics I was going to, somebody asked for the 5 topics. So let me just mention them. Basically, 1, you have your digital economy. 2, you have international tax. And under the international tax, you have regional integration and trade blocks, right? Then you want to look at your merger and acquisition, your transfer pricing, right? So that's basically it. So, and then your introduction to tax. That's what I was trying to remember. Introduction to tax, basically, that's things around multiple taxation. And I think they want to look at multiple taxation this diet, given that that's one of the things that your tax reform bill is addressing. So I think they want to look at multiple taxation this diet. That's the 5 core I think you should face for now for the theory. And of course, they will look at any of those 5 to bring a lot of things for you. Digital economy, looking at it from the IT perspective, international tax, and under international tax, you should be looking more on the regional integration and trade blocks, merger and acquisition, transfer pricing. Also, from the transfer pricing, you should be looking at base erosion and profit shifting. Base erosion and profit shifting is something that they can be looking at too, right? Then beyond that, you then want to look at your international introduction to tax. That's things around tax administration, but you want to emphasize more on multiple tax. And I'm emphasizing more on multiple tax because that's one of the problems that your tax reform bill is addressing. And since last year, the tax reform bill has been resounding, right? It's one of the major shifts in the tax space. So that's what formed the basis for my prediction or my argument here. So let's move on. So the digital economy is looking at World Wide Web, the impact of IT. So when you're looking at digital economy, I'm only saying that people now do transaction online. I mean, I'm teaching you on Google Meet. I've not seen many people on this call before, right? And I'm sure I might not meet anybody, right, again, even after this class, physically. That said, there must be 1, intensive use of ICT, codification of knowledge. That means there must be knowledge codified. Number 3 is transformation of knowledge or information into sellable items, that's commodities. And there must be new ways of doing things. If you had told somebody in 2019 that there will be something called remote work or hybrid, somebody must have argued blindly that things in fact, you would have said that it's not possible, right, to have an hybrid work model. But of course, almost all work now have hybrid incorporated into their operations. So that's an example of new way of doing things. So this thing again is something you can think about in the exam. Please try as much as possible not to cram things. It will make you box. Don't box yourself. your exam, make sure you think wide for the theoretical aspect of the course. So, Mr. Victor, you want to scroll down a little bit so that we can move on. So, there are three major things you want to look at here. Number one, you want to look at what is the impact of OECD on digital economy. What is the impact of European Union on digital economy? And what again is the idea of permanent establishment? That's P, right? Now, before Finance Act 2019, where significant economic presence was introduced by Buhari in the first Finance Act that was issued, right? There is something that was in Common Income Tax Act, permanent establishment. And that is to say that only companies with permanent establishment in Nigeria should be assessed with tax in Nigeria. But then you would realize that there are many companies, there are many organizations who necessarily do not have to have physical presence in Nigeria. Say, for instance, an average person on this call has Netflix accounts, will pay an average of 1,002 monthly. I'm not sure Netflix has an office in Nigeria, right? An average office in Nigeria pays for Microsoft subscription and a lot of those things. So then there was now a need there's a need to shift from the idea of permanent establishments to physical economic presence, significant economic presence, SEP, right? Significant economic presence. Now, what you want to look at is that the OECD, right? That's Organization for Economic Cooperation and Development, and European Union now incorporated something called digital sales tax, right? And then they redefined the issue of permanent establishment at the global level to now include virtual permanent establishment. Virtual permanent establishments. You want to move down a little bit. So Nigeria seems not to have made any significant progress. You would agree with that. Hold on a little bit with taxation of digital economy, right? Because of course, for you to subject any business to tax, you have to understand first the business model, right? You have to understand the business model. And unfortunately for us in this part of the world, we do not move towards the global trend very swiftly as it ought to be, right? So that becomes a problem for Nigeria, basically. That becomes a problem for Nigeria. Then before we now move into, for us to understand digital economy very well, we have to look at the concept of e-commerce and e-business, right? The concept of e-commerce and e-business. To simply put it, right, e-commerce has to do with trading. And if you remember, trading has to do with buying and selling of goods and services. So e-commerce is basically an online transaction. You have your Jumia of this world, your Konga of this world participating majorly in e-commerce. So what they do is just interact with sellers and buyers and sellers meet together. What is commonly, they come together, and then that is e-commerce basically. But e-business is e-commerce inclusive, right? So it has to do with all activities that has to do with business, all business activities. So in e-commerce now, you have things like inventory management, you have things like customer relationship management, you have stuffs like your enterprise resource programs, your ERP, you have things like your supply chain management, you have even e-commerce itself is an integral part of e-business, right? Then another thing you want to look at is that e-commerce has to do with just the use of internet alone, right? So for you to participate in e-commerce, all you need to do is just e-commerce, use internet, right? Just build a website or use an app, really. But for e-business, you are looking at internet, intranet, extranet. So your mail communications, your internet and extranet, everything incorporated makes e-business. So though they use them interchangeably, so you could be asked that you should differentiate between e-commerce and e-business. It is examinable. I've seen the examiner test it before at your level. So it's not something very, very, I know it sounds very small, but then it's something that can be examined. You want to move down a little bit. Please just respond that you can hear me. That's just
Yes,
thumbs
can
up.
hear
If
you.
you are following me, okay, good. So what is, now let's look at the problem that we have in Nigeria. Well, let's look at the problem that we have in Nigeria. The problem we have in Nigeria is that there's complexity in e-commerce taxation, right? You will agree that uh, our usual practice, you keep your hand raised until the Q&A session, and you can as well use the what's the name now? Your chat room to drop the questions that I will attend to as time move on. So, okay, I will reiterate that. So, e-commerce and e-business, e-commerce has to do with trading alone, buying and selling. E-business is all business activities incorporated into business, right? So you have your supply chain, enterprise resource programs, your customer relationship management, etc. Then you have things around your internet. Your e-commerce will only have to do with internet, right? While your e-business will have to do with internet, intranet, extranet. Your e-commerce has to do with just website or mobile app. Your e-commerce has to do with all forms of business communication, right? So those are major differences between e-commerce and e-business, right? So now let's look at the complexity. Now, the point is in a country where, like Nigeria, there is actually problem determining the tax base, right? By tax base, I mean the asset or income that will be assessed to tax, right? And number two is that Nigeria is not data driven, right? I was conducting a research on SME industry recently, right? And I found it difficult. The most current SME data in Nigeria is as far back as 2019, and we're in 2025, and everybody's making reference to 2019 data, right? That's to tell you how archaic that is. The last time census was done, 2006. Even CAC cannot tell you the total number of, Joy, you want to mute your mic, the total number of operational businesses we have in Nigeria. So now that we don't have data, Nigeria is not data. Joy, please help us.
What was it doing?
Continue the class.
Joy, please.
Continue.
Okay. So I was saying that the problem that we have with yeah, taxation of e-commerce, basically the complexity is around data. So we do not have an active data, we do not have an active platform, we don't understand the business model. And because we don't understand the business model, it becomes a problem to even assess these guys to tax, right? And given that a lot of businesses now are moving towards the online model, right? So it becomes a problem. Many people in Nigeria have online work. We have many people registered on Upwork, on Fiverr. They make a lot of money compared to even some of us that do 9 to 5, right? But yet they still escape the tax net because we don't understand the business model, right? So we don't understand the tax base, the character of income that is being generated by the e-commerce platform. And if you don't understand it, there's no way you can assess it to tax. We want to move down a little bit again to the next page. Right. So I've explained that. Now we have some school of thought that support the taxation of e-commerce, right? There are a couple of them, and the first one is e-commerce with the view of benefit theory, and that is saying that everybody enjoy from the government, right? Everybody enjoy from the government. The rain that falls on the good falls on the bad. Everybody enjoy. Although each time I say this in the class, people laugh, but I believe you will laugh too. So everybody enjoy good road, good light, subsidized. Okay, not subsidized again, Abby. but we enjoy from the government. And those people who use online model for their business, they enjoy intellectual property rights, they enjoy a lot of social benefits. So everybody is enjoying the government in Nigeria, basically. So that's to say that everybody is benefiting from the government, and your benefit is done. This benefit is being enhanced by the taxpayers' money, right? So for that reason, you have to keep assessing everybody to tax. Number two, it is principle of neutrality. Now, we are saying that, now take for instance, it is not fair on people who use traditional model. For instance, if you have a bookshop, for instance, and you have a physical bookshop, you pay your rent, you pay for lightning, you pay for, what's the name now, you pay even your sales girl, you pay him. At the end of the day, you are going to incur more cost. And then there's somebody who writes ebook, writes electronic book, and is selling online. It doesn't necessarily have to incur the cost for rent, the cost for the sales rep, all the related costs. And then you are assessing the traditional business to tax, and then you are not assessing the other guy to tax. Then there is a problem, right? It's not fair. It's not neutral enough, right? So that's against the principle of neutrality. The number three is the vertical inequity. We are saying that vertical inequity is also related to neutrality. Basically, they are pretty much saying the same thing. That is not fair enough. It is not equitable enough for us to subject businesses that are e-commerce to tax. And then finally, the fourth one that is not here is looking at it from the perspective of taxation of digital economy, not a constraint. Taxation of digital economy, not a constraint. And that's looking at what we've identified. And for us in practice, we've seen many of these. We've seen businesses who make 27 million naira gross turnover in a year, and they will tell the tax consultant and auditor, please, I beg you, look for a way to make sure it is not above 25 million, so that I won't cross the tax threshold to get to 20% CIT, right? So that's part of it. And there's no proof whatsoever to say that even it is not a constraint on them, right? It's not a constraint. There's no proof that tax is a burden on people, because everybody is enjoying the benefits from government, basically, right? So, and one thing is that if you say that e-commerce business or e-commerce participants, operators in the online business should not pay tax, right? Then you realize that in the next 2-3 years, you will likely see all shops closed, all traditional business model closed, because there is tax exemption somewhere, right? So now let's look at tax problems that are posed by electronic transactions. And this is where I think the examiner will want to focus on, right? He's looking at it from, number one is identifying the income to be taxed. That I've said that. Number two is identifying the jurisdiction where the tax base emanates from, right? Number three is that determining the place of residence of the individual, right? Establishment of fixed base of an entity. And then number three is determining the place of effective management, especially for non-resident individuals. All right, let's look at challenges. Now, if you are asked these challenges, right, you shouldn't be talking about the problem. That's not what the examiner wants to hear, right? The examiner wants to hear the problem and the solution. So typically, if you look at the marking guide, what they do is that for the problem you state, there's a mark attached to it. And then for the solution you provide to the problem, then there's also a mark attached to it. So basically, we've identified the problem, and then you have to say the solutions. Don't necessarily cram in anything, just the actionable steps. Right. So what are the actions to tackle digital economy? Number one is review the scope of this base, which I believe significant economic presence has actually addressed. That's Finance Act 2020. Number two is adopt the creative approach through innovative tax legislation Thank God for beginning from 2019, there is now renewal of tax laws every year, and with a very gift that is going to be introduced by the reform bill. You would just imagine before 2019, the commencement rule, a tax business has to tax 3 times. It doesn't make any sense, really, right? So thank God for the new approach, the creative approach to assessing businesses to tax. Number 3 is there should be automation of tax administration, and that will bring you to understanding the idea of tax promise. Is a very thing you want to know. Tax promise, the 5 things that tax promise does. There are more than 5, but the 5 major things it does: your e-registration, electronic registration of taxpayer, your electronic generation of tax clearance certificates, your electronic audits, that's your e-audit, your e-filing, where you're able to file your tax returns, and um, finally, I lost my track of thoughts. Right, that's basically it, basically, and a lot more. Anyway, you may want to read that up on your own, but that is still under it, automation of tax administration. And if you want to write, you are going to write, just write it in your own words about how they should administer taxes, how the tax process should be automated. And I also believe that there should be a nexus between the NIN, that's NIMC, and tax authority. And even there should be a way to link your account to the tax authority's account. But the people don't want to agree with what I'm saying now, actually. But then another point is data handling. We've addressed that. If you check the NBS portal, you will realize that there are a lot of deficits, or there are a lot of old data that you have there. Not major things are not new, right? The GDP was not released for Q4, was not released until March, sometime in March or even early April, and the likes. Later, and there's timeliness in everything, right? Then the next one is strategic partnership with digital economy service. So we have partnership, although that is also ongoing, partnership with MTN and some digital service providers, right? That should be so. An average business see tax as police, but that shouldn't be it. There should be strategic development, and also there should be capacity development. So there should be more capacity building for all taxpayer for all tax participants. So we are looking at it from the consultant's point of view, from the tax administrator's point of view, and the taxpayer's point of view. So that each person, there should be capacity building for everybody. Does it make sense to this extent? Do you understand it to this extent? All right. So you want to skip those parts. I think I've explained it. So when you are reading it, you have an idea of what you want to do, right? So let's look at one major thing that Finance Act 2019 actually introduced: significant economic presence. It was introduced by Buhari, and I think with Kemi Adeosun, who is that? It was Kemi Adeosun that first introduced it when she was Minister of Finance, but then supported by Buhari and incorporated in Finance Act 2019, right, which actually adjusted the definition of permanent establishment. And how do you determine, major thing here, how do you determine if a company is said to have significant economic presence? So any company that makes a turnover of 25 million, right, in a particular year of assessment, either from streaming or for transmitting or for providing goods and services to Nigerians, or trying to intermediate with Nigerians in order to get the attention of Nigerians, then such entity is eligible to be assessed to tax in Nigeria, right? So if you're able to derive over 25 million from any of those services, you'll be assessed to tax in Nigeria. So for that reason, if we have a proof that any Google outlet, any Google transaction is over 25 million naira in Nigeria, Google subscriptions and the likes, so Google should be assessed to tax in Nigeria. That's what it implies, right? And the like. So example like that. Number 2 is any company whose website ends with .ng, right? Then that's Nigerian's domain name, right? So if it ends with .ng, we are saying that in that case, you should be assessed to tax in Nigeria, because at least you are registering your website in a bid to attract Nigeria. Then that leads to the third one: any entity who is determined, who customizes data page, right, or his website or his application in a way that is appealing to Nigerians, to gather Nigerians, then in that case will be assessed to tax in Nigeria. Any question? So let me pick your question. So that's it about digital economy, basically. Do you have any question? Okay. So let me check the chat room. I will address to. Let me address all of that.
Hi, Michael. Sorry. So
Yes, sir.
the mic has been automatically muted. So they may not be able to unmute themselves. So but let me assist you, or you may use the chat box. But let me just ask them to. Can you see anyone that raises hands?
Yes, I can see about 3 or 4 of them.
So I think we can.
Or you can call them. They can
Hello,
now
sir.
Yeah.
ask questions.
So we have only 3
All
people
right,
who have
it's your
raised
question.
their hands now. So after the 3 of you, we will not be allowing anybody else. So Luchi, Elizabeth, Victor, and Latifa. Only the 4 of you. All right. So Luchi. Okay, Luchi is not available at this time. So right, let's go with the second person.
I'm here, sir.
Okay, please go ahead.
Hello, sir.
Yes, please go ahead.
Okay. No, I think it was in error. I'm okay. I quite understand
Okay.
everything you're talking about.
Okay, Victor.
Okay, my question goes this way. Some of the ISP, some of the internet service providers who are not resident in Nigeria, but they render services, would there be access to tax in Nigeria?
Yes, based on the income derived in Nigeria. That's the adjustment by significant economic presence. But whether or not they are assessed, now there are 2 questions that I would believe you're asking. What the first question is: are they supposed to be assessed to tax in Nigeria? The answer is yes. Are they assessing them to tax in Nigeria? Only Mr. Zacchaeus can answer that now. You understand?
Yes.
Have I answered your question, Victor?
Yes.
Okay. So Latifa.
Hi, good evening.
Yeah, good evening.
So I just want to ask if this
Sorry, good
for everything
afternoon.
for the topic, or we should read more on I can pack.
So but to be honest, there is a part of that topic that I think can be examined, right? And that is, what are the technologies disrupting tax practices in Nigeria, right? There are 5 of them. And if you are looking at it from the technologies disrupting tax in Nigeria, like I warned before, again, when you are trying to write about them, you should write in such a way that you are profiling solution. It's not enough to mention the problem, like his application you're writing, right? So at this time, you should be able to write the problem and also profile solution. So you have your data analytics. That's one of the problems. One of the technologies disrupting tax: data analytics, mobile application, social media, blockchain and cryptocurrency, and then cloud computing. Those are the 5 technologies disrupting tax practices. I may want to check them. That's basically it.
Thanks.
If there's anything you should read up, that's the areas I'm advising you to read up on. That's what I'm saying. All right. Elizabeth. Elizabeth. Okay. Elizabeth is not here. So I think you can mute everybody now. So let's move on. So let's move straight to.
Okay.
All right.
Okay, Michael, you may want to.
Yes.
It may interest you. I think the study part that for digital economy. The chapter 31. I don't know if the content there are same with this.
Yes, the content that's still with it.
They are same, abi just a duplicate.
Yes, yes. This is an abridged version of that.
Okay, you can move to another topic then. It's fine.
Okay. All right. So I think I've discussed everything there. So let's move straight to base erosion and profit shifting. Just click on that. Let's move straight to base erosion and profit shifting. Just put base erosion. No, profit to profit. I'm sure there will be many profits here. We'll just type base. Yeah. Just put erosion in front. EROSION. Yeah, that's it. So I want to believe that we all know the difference between tax avoidance and tax evasion, right? And the simple way to know it is very simple. You always say one is legal and one is illegal, right? Tax avoidance is legal, tax evasion is illegal, right? But they're largely the same thing, just that one is a legal approach and the other is an illegal approach. But if you find it very confusing, right, which is normal, okay, so I should put the 5 technologies: mobile application, social media, data analytics, cryptocurrency and blockchain, and cloud computing. Those are the 5 technologies disrupting tax. So you can be asked, that is a common topic. I think it was tested sometime around 2023. It was tested. I know. It was tested around that diet. It was tested, yeah. So now I know you know the difference between tax avoidance and tax evasion. Any student that has, again, okay, I'll repeat. Mobile application, social media, data analytics, cryptocurrency and blockchain, cloud computing. Yeah, thank you. All right. So obviously you'll be asked to explain how each of them are disrupted. And I believe you can explain, but still let me over assume. Right. Now, data analytics is speaking to the fact that you now have a lot of tax administrators who cannot use Excel, Tableau, and things like that to create insight. And beyond even Excel spreadsheets, there's need to create more insight for taxpayer, right? Generate report that will be of insight to tax, that will provide insight to everybody, the taxpayer, the tax authority, and the tax administrator. Basically, that is what data analytics is talking about. So number 2 is mobile application. We are saying that with mobile application now, everybody can work anywhere, right? The likes of Tax Pro Max built up, but it's not yet a mobile, it's a web app, for instance. But we're looking at that. If it's now an application, that means that people can do their filing anywhere, anytime. And what is the implication of that for regular tax practices? You're looking at cloud computing, almost the same thing with mobile application. People can now work remotely. What's the implication for taxpayer? What's the implication for tax authority and the tax consultant? Blockchain has to do with people now transact with cryptocurrency, but people don't still understand how cryptocurrency works in a normal environment, right? So how is it going to be assessed to tax? And also, I think in 2023, Finance Act 2023 addressed the issue of assessing capital, assessing crypto assets to capital gain tax. Notwithstanding, the tax authority do not have a very full grasp of how cryptocurrency transactions operate. And in fact, at that time, it was an issue because crypto assets were banned in Nigeria. Things like that is what you want to say under cryptocurrency and blockchain. And then you have what's the next one I mentioned? Social media. So tax consultants have to now go online. There are a lot of tax education online. If you are on LinkedIn, any new law, you always find the interpretation on LinkedIn. So that's disrupting. So any tax consultant wants to get business, we now have to go online, have a working social media application, and be able to do all of those things basically. And also, one I didn't mention, I forgot to mention, is artificial intelligence, ChatGPT, DeepSeek, Perplexity, and the likes. So they are disrupting. Like some people will say that AI will take people's job. I doubt it. If it's going to take anybody's job, AI cannot speak as fluently as some of us can speak, Abby. Besides, AI is garbage in, garbage out. That's the best it can do. It only picks from what is available online. So if nobody's feeding it, it can't feed itself, basically. So AI is not ready to take anybody's job. That's just the part you want to add up to your knowledge bank, basically. All right. So let's move back to base erosion and profit shifting. So I was speaking about base erosion and profit shifting to, I was speaking to tax avoidance and tax evasion. Now, the simple meaning, tax avoidance is legal. So any student that has A, that's avoidance. You say he passed it excellently. So that means taking advantage of tax loopholes legally to reduce your exposure, your tax exposure, or to reduce your tax liability, right? While tax evasion is still taking advantage of tax loopholes, but basically illegally. So you have the stuff like not being able to wrong disclosures, understatement of revenue, and stuff like that. So those are examples of tax evasion practices. So that's it. But I've not explained base erosion and profit shifting. So I only wanted to use that to build a background for this topic. So please go back again. So yeah, thank you. Sorry. So what is base erosion? That's the idea. So base erosion this base erosion and profit shifting is common among multinational corporations, right? It's an issue. And what are they doing? Is just trying to take tax planning approach to reduce the taxable profit, right? To reduce taxable profit. So look at it, tax base basically speaks to assets or profits, basically. So the word base erosion is actually tax base erosion, if you look at it completely. So trying to technically erase the tax base, right? Wipe out the tax base so that there will be little tax liability exposure, right? So that there will be little tax liability that will be paying in a particular region. Does it make sense? Please thumbs up if you understand what I was trying to explain. Right, good. So trying to erode your tax base technically, trying to make sure that you move from one place to the other, right? So that you are trying to reduce your taxable profit. So trying to reduce activity in a particular region, or that's what basically is base erosion. What about profit shifting? Profit shifting looks like base erosion, but now is a little bit more detailed in looking at it from the profit point of view. So we are saying for profit shifting, you're trying to move your profit from a hostile environment, tax hostile environment to a relatively tax haven. A tax haven is a place that you pay little or no tax liability, right? A place where you pay little or no tax liability is called tax haven. That's what is called profit shifting, basically, right? Moving from a place that is tax hostile to a place that you have little tax exposure. So let me just give you this. There was a time I had an exposure. So this will make you understand what I'm explaining very well. And for some people who work in multinational corporations, and I believe consultants will be able to relate with this one very well. You will realize that sometimes you will just have shared service costs from the parent company. Things like shared service, and sometimes even you yourself, you'll be wondering if you are the person that is supposed to make money, you'll be wondering where is this shared service coming from. It may be an act of profit shifting, basically, or trying to, you see some parent companies not trying to introduce what's the name now, equity. They will prefer to introduce debts to fund debts to fund their subsidiaries by way of debt rather than by way of equity. So you call that thing capitalization. That's still an attempt to for base erosion and profit shifting. Those are ways in which you can carry out base erosion and profit shifting. Again, base erosion is a tax planning measure to ensure that the tax base is actually eroded so that there will be little tax liability exposure. Right. Please move down a little bit. So what are the ways in which you can carry out base erosion and profit shifting? Because they move hand in hand. Because in fact, your profit is also a form of tax base, basically. So you have your trademark and technology licensing transfer pricing. That speaks to the idea of, you will see things like shared service. You will see things like paying for your parent company managing your technology products, right? Because they will tell you it's dollar denominated, your technology is not localized, stuffs like that. You pay for goodwill, pay for brand name and the likes. Those are ways in which you achieve. That's one way in which you achieve your base erosion and profit shifting. Number two is think capitalization, and that has to do with financing your companies. That's companies in tax hostile environment by way of debt rather than by way of equity, so that at least interest is allowable expenses, but dividend is actually not even considered. Your dividend paid is not considered in your allowable and disallowable expenses, so to say. So, but that's why this Finance Act was trying to introduce the concept of 30% of EBITDA, right? So interest on loan is now restricted to 30% of EBITDA in a way to ensure that your interest on loan is not packing the bulk of your profit, right? So number three is hybrid mismatch arrangement. So trying to things like double taxation, taking advantage of double taxation treaties to reduce tax burden. That's an idea of hybrid mismatch arrangement. And you have also putting assets into entity without substance. So you see companies not operating in a particular company, but putting assets in that company, so that at the end of the day, the companies where there is actual operation, they will move money from there to where assets is. So assets will be in a tax haven, operations will be in a tax hostile, trying to move money from the tax haven to the from the tax hostile environment to the tax haven. That's why you see most of the time that the group company most of the time will not have any activity, so to say, right? But they will tell you what they are doing is advisory services to the subsidiaries, basically. That's an example of base erosion and profit shifting, and you still pay them for those services rendered. Does it make sense to this extent? All right. So move down a little bit. I believe we should be done with base erosion and profit shifting like that. So, okay, move on. Thank you. So what are the contributing factors to base erosion and profit shifting? We've looked at digital economy, right, as it were, and we're looking at the international cooperation, right? international cooperation in the sense that OECD and EU and other international corporations are meeting together to address the idea of trying to reduce base erosion and profit shifting, because tax societal environments are now crying, right? Countries don't benefit significantly from that action or from base erosion and profit shifting. Mind you, they are doing it within the confines of the tax law, so it is not tax evasion, it is tax avoidance. Does it make sense to you? So, what are the actions against base erosion and profit shifting? Number one is addressing the tax challenges of digital economy, which we've spoken to. Number two is to neutralize the effect of hybrid mismatch. That's neutralize the idea of double taxation. Make sure it is not you are not doing it at the expense of other countries, basically. Number three is strengthen controlled foreign company rules, especially between parent and subsidiaries. Limit interest deductions and other financial payments. And I've spoken to that. That's by introducing, that's what 30% of EBIT that was trying to address. Counter it more effectively by taking into account transparency and substance. Move down a little bit more. All right. Yeah, preventing treaty abuse. That's speaking about so that companies don't illegally take advantage of your double taxation arrangement. Preventing artificial performance of permanent establishment status. To assure transfer pricing are in line with value creation. So, as regards brand name, we want to be sure that even the brand name we are paying for, it is worth it, right? That's the idea of intangibles. And also, risk and capital is looking at it from the perspective of debt funding and equity funding. So, we are paying dividend. Make sure that your dividend is not exaggerated. Your risk exposure is normal, right, and the likes. Then abuse of transfer pricing performance are in line with value creation. That's for other high risk transaction. You are not trying to um, make sure there's a risky end to your transactions, basically. Then requires taxpayers to disclose tax aggressive or aggressive tax planning arrangements. And I think that is what country by country reporting and transfer pricing disclosure is trying to address, basically. I think we should still get to that point anyway, where we discuss country by country reporting and transfer pricing disclosures. That's what number 11 and 12 is trying to discuss. Methodologies of analyzing data, right? Examine transfer pricing documentation, develop a multilateral instrument, that's multilateral arrangements, speaking to double taxation arrangements, tax treaties, and the likes, and develop dispute resolution mechanisms across countries. So that's to enhance cross-border trade. And also, the cross-border trading is not done at the expense of the other countries, basically, at the expense of the parties to the trade, basically. All right, so let's move on. So country by country reporting. No, we have not explained country by country reporting, CBCR. So country by country reporting was introduced in 2018 to address the idea of base erosion and profit shifting between multinational corporations. So I think I can't remember what I said now. But all multinational corporations should be required to file their country by country reporting before June 30th, before 30th of June, right, of the subsequent year of assessment, right? We are required to file that. Yeah, I have a chart, typically the prefix, Michael. Okay, I'm not sure right? But we'll try to ensure it is available. But as much as possible, try to make notes and try to make notes, basically. Try as much as possible to make notes of these things we are discussing. But I hope you are finding these things helpful, basically. You are finding it helpful, please thumbs up to encourage me. Okay. Okay. And I believe you can relate to everything I've said. You see, very good. Thank you. Thank you for the participation. Makes sense. Thank you. Thank you. Thank you. All right. So country by country reporting, right? So it was introduced in 2018. It was introduced in 2018. Number one, what is the objective, right? Like you would always say, is to improve transparency of multinationals in their tax practices, to prevent tax evasion and avoidance through base erosion and profit shifting, and to provide tax authorities with information about MNEs, global activities. By MNEs, we mean multinational entities or multinational enterprises, global activities. If you see multinational MNCs, we are saying the same thing, multinational corporations, profit and taxes. What are the scope of the regulation? Scope of the regulation. A little bit. Move down, Victor. All right. So beginning from 2018, all multinational entities will be required to uh, disclose, right? Provided the revenue is up to, this is what I was trying to remember, up to 160 billion and above, right? So you're expected to disclose basic vital information regarding your what's the name now, between you and the subsidiary. So you're expected to disclose the group revenue, the revenue of all the subsidiaries, including the reporting entity, the expenditure, the inter-party relationship, right? That's intra-company transactions basically, and all of that. That's basically what the country by country reporting is basically requiring you to do. Please scroll down a little bit. So I've spoken to revenue, your disclosure, revenue, profit before tax. Move down a little bit. Income tax paid, capital accumulated earnings, and number of employees, tangible assets. So what are the fines? That's 10 million naira in the first year you refuse to file, in the first month, and 1 million naira subsequent. I think it has been reviewed to 25 million. I'm not sure. I didn't do, I don't know. Didn't do, uh, I didn't do CBCR this year. I don't know. Number two is false declaration of filing incorrect that attracts 10 million naira, and failure to provide modification attracts a penalty of 5 million naira. In the first instance, an additional 10,000 naira for every day of default. Right. Does it make sense to you? Right. So with this, we've stopped, or we've concluded basically country by base erosion and profit shifting. So, like I said, this topic is very, very easy. No cause for alarm at all. Write your own words. But again, you must understand the idea behind each of the thing we are saying. In case you see country by country reporting, at least it's not going to look new to you in the exam, basically. Right. And with that, you're able to earn your marks and move on with it. I'm sure if you follow instructions, you'll be playing with 60s, 70s, and 80s. Right. Does it make sense to you? So let me address topic questions now. If you have questions, please raise your hand. All right. All right. So Latifa again, Sheyi, and Benjamin. Latifa. Okay. Victor, you can unmute everybody for now. Victor, are you there? Okay, so click on the three dots. No, the three dots. No, no, no. So you click on this part, this thing that looks like padlock. There's something that looks like padlock to your extreme right. Yeah, so scroll down a little bit. So turn on, yeah. Okay, good. All right. So that's done. So once we are done with the class, thank you very much for that, Victor. You're very active. Thank you. I do not. All right, so let's address everybody. So Latifa is the first. Yeah, please go ahead.
So sorry, I don't have any question. It should be a mistake. Thank you.
Ah, so right there, Victor, do you have a question?
No.
Your own is a mistake. Lower your hand now. Just raise your hand now. Okay, Benjamin.
Yeah, hello, good evening, sir. Good evening, colleagues. Thank you very much, sir. Please, my question is in
Good evening,
respect
Chief.
to the last topic we treated before this on taxation of digital economy. I
Digital
dropped a
economy.
question on the chat box. Yes, sir. Sorry, I'm dragging us back, please.
No problem. No
Under the
problem.
termination of SEP for digital activities, that's the number one
Yeah.
condition. I just want to know how would the Nigerian tax system be able to identify if this particular company abroad earns um, turnover of up to about 25 million for them to be taxed here in Nigeria? How would they be able to ascertain that? Is
So
there a black
again,
or
it
anything?
raises the question of the question you're asking is just the question every other person will ask. That and that is speaking to the fact that we don't have good database in Nigeria. So they still rely so much on the disclosures by those companies. I'm not sure there is a personal tracking system for Nigeria, although in reality, what they do is best of judgment. Everybody know that Netflix is making a lot of money from Nigeria. So they do best of judgment from that. Everybody knows Google is making a lot of money from Nigeria, so they use best of judgment. Besides, there is partnership between most of these tech companies and Nigerian companies. So in a way, there's an handshake between them. So, but other than that, I'm not sure there's an already existing way. Even for those who do business traditionally, they are still struggling with determining their tax liabilities correctly. Not to talk of those doing businesses digitally. So that speaks to wrong database. We don't have a good database in Nigeria. If you just check what I'm about to say now, go to Smedan's website. You realize that the current number of you don't have the correct number of SMEs in Nigeria, right? I think the data you have there is as of 2021 or 2020. So again, it's a problem. I'm sure if you want to say what's the total number of people you have in Nigeria, you say about 234 million. A country that's not able to determine the people, that's not able to cater for the people in Nigeria correctly, how is it going to determine, even look for people outside Nigeria? Do you understand? Benjamin, have I answered you?
Yes, sir. Thank you.
Yeah, Olusheyi. Olusheyi.
Thank you very much, sir. Good evening.
Yeah, good evening, Chief.
Please, I just want to ask, is there any difference between base erosion and tax planning?
So good. Tax planning is a broad name. So base erosion is a form of tax planning. So anybody can do tax planning basically, right? Anybody, both individual, resident and non-resident. And in fact, should I give one of the course I do? But I technically do tax planning. Basically, if I have money now, I technically would like to invest in treasury bills because treasury bills is exempted from tax. Basically, that's tax planning, right? I deliberately would want to increase pension, right? It's a long-term savings plan. That's a way of tax planning, basically. So business is also a way of tax planning. Does it answer your question, Shay?
Yeah, thank you very much. Thank
Yeah.
you.
Sunday. And then,
Hello, good evening. Good evening, everyone.
yeah, yeah, good
Yes,
evening to you.
thanks for the effort. Well, one thing I observe in this theoretical aspect of this revision class is that you know I expected that as we are taking this topic one after the other, you will have just quickly look at the way the question is structured
Ask Abby.
in exam. Then
Okay.
we quickly look at how to tackle it. If we are asking you to at least, all these manner of writing it as in form of a letter, in form of a memo, in form of this thing that you are tasking it,
Okay.
one thing that you. So we just try and see the little two technical area that you must observe and how to go about it. Since we are facing the exam, I think that should be
Okay.
also observed while we are taking
Okay,
this
no problem.
topic one
Actually,
after the
okay,
other.
no problem. No problem. Actually, it's my intention, but then the bias I had at the beginning of the class was that I believe you won't be able to attempt it without understanding the concept of the topic. So I feel introducing you to the concept of the topic makes sense. But then I think what you said is legitimate. So we'll do that now, right after this. I'll take that into consideration now. Right.
Thank you very much.
You're welcome. Basirat.
Good evening. Thank you so much for your time. So first, you said something about tax planning being part of tax base erosion. So the example you cited, like doing treasury
Part
bills
of
and the
tax
like,
planning.
sir?
Base erosion being part of tax planning. I didn't say
That's
tax
what
planning part of base erosion.
sorry, the other way around.
Okay.
So you said
Okay.
buying treasury bills and the likes, pension stuff. Is it as an individual or in the company perspective now?
Both of them.
Okay, so even a company can go ahead and buy treasury.
Yes, any company make from oh, you want to pick my brain and go and infect it to your company without pay advisory fee.
No, no, not really. I was just
But
wondering that
okay,
if
any investment you make in treasury bills, right? Any investment you make in treasury bills is non-taxable, right? So
okay,
companies deliberately
and
do
even
that.
the interest that is being paid on that is paid
Exactly, that's
quarterly
the
on
point.
those.
Yeah, it's not taxable. Any investment, either by way of bills or said bond that you make in federal government is
Mm,
not taxable income. That's how banks make a lot of margin,
money.
right?
Very mad money. Okay, then another thing with the aspect of companies, that's multinationals now.
Mhm.
Say maybe parent company is here and they are now trying to open across other part of the country, and they are sharing the example you cited that they might be doing the expenses
Shared
as
service.
the yeah. Are you saying that
Yeah.
is not allowed, or there
No,
are ways to
that's an
mitigate
example.
that?
Those are ways of base erosion. Those are ways of achieving base erosion and profit shifting. Do you understand? It's not illegal. But those are
Okay,
ways. I'm only giving you examples of how you can do the tax planning we are talking about. That's another way they do it, right? So, say
okay,
for instance, they transfer 25% of their expenses to the parent company. They will tell them that the parent company provides advisory fee, management. You know what I'm
to
talking
them,
about
yeah,
to them,
yeah,
the
yes.
NIC.
So, and now
Yeah.
that
So,
it is, what is tax saying? Is he citing these things as problem, and what are the solutions you are profiling, or they are saying it is allowed
so,
because it is kind of
so it is allowed, right? But now, at the end of the day, what transfer pricing is trying to now look at, because at the end of the day, those things come under transfer pricing disclosures, right? Your transactions should be disclosed. So in case you get loans from parent company, loans from subsidiaries, fellow subsidiaries, shared service, things like that will be disclosed, right? In your transfer pricing and country by country reporting disclosures, especially in your transfer pricing, basically. So what the tax authority want to do is, were those things reasonable enough? So they will want to
place them on rent test, and then they want to check it at arm's length transaction. Do you understand?
Okay.
So
Okay.
that
So it
way,
is
if it qualifies, if it passes the rent test, is
arm's
allowed,
length. Yeah. Okay.
then the
Yeah.
arm's length
Okay.
royalty will be taken into consideration. That's it.
Okay. It is when it doesn't meet those conditions that it gets disallowed or
Disallowed.
stopped. Yeah.
Exactly. Exactly.
Okay. Okay. Okay.
All right.
Thank you. And most of these laws with multinationals, are you sure they are not mostly paper, written on paper than
No, no, no,
um?
no, no. I mean, I've seen it worked for me firsthand.
Okay. Okay. Thank you so much.
Yeah. You're welcome. But then you have to pay for advice you, because this way you are saying thank you so much. It's like
Nothing is happening really. I'm just trying to like relate it to what is actually happening in real life. Most times when you read this I can pack to now write it in exam seem more difficult. But when you give us
okay.
scenarios like this and all of that, it make it thinking better. That's what I am
Yeah, it
trying.
makes it relatable. I agree. All right. So
I'm not picking
Victor,
brain.
I know she's
Yes, sir.
picking my brain, don't worry. Yeah, Rafiat. Rafiat.
Hello, good evening.
Yeah, good evening.
Hello.
Yeah.
Please, my question is concerning base erosion. Hello,
Okay.
can you hear me?
I can hear you.
Concerning
Please go
base
ahead.
erosion profit shifting
Yes.
and trade blocks, is there any revised finance acts pertaining to those topics?
No, no, not at all.
Oh, so it's only company income tax and capital gain tax that there is amendments.
Yes, yes. So another thing I will let you know in the course of the class as the class goes on.
Hello?
I said another thing I will let you know as we do the topics one after the other.
All right, sir.
All right, so let's move on. Victor, you want to share the tax this thing? Give me the tax past question guide for ATAX. No, that's it now. That's your second document. Second from up. Yeah. So let me check. I'm sure BEPS has been tested. Let me check for BEPS and what's the name of this other guy? And digital economy. So you can see IT is the same thing. You can see how it has been tested point on point. So everything you see under current issue. The only part I've not discussed with you now is the idea of regional integration and trade block, which I will discuss with you, and then ethics. So let's look at one of them. Pick November 2021. No, pick November 2021 question 5. And so pick November 2021 question 5, May 2022 question 2, and May 2023 question 2. So let's deal with that first. So we'll come back and then deal with November 2021 question 6, and then we'll move on like that. Hope you're having value from the class. Okay, good. That's it now. Go to the question 5, I think.
Yeah, ma.
This is
No,
an
yeah,
acquisition.
This is November 2022,
no.
question 5.
This is not an acquisition. Please move down a little bit. I'm still mad here. This is not an acquisition. Please check the persuasion guide. Let's be sure. So it's November 2021, question 5. No, May 2022, question 2. Sorry, I'm the one who made mistake. May 2022, question 2. May 2023, question 2. You want to mute everybody, Victor? All right. Move on.
May 2022, question 2.
Yeah.
This is it.
Okay. So let's just now. I would have loved to that you read. Okay, so I think you've known all of this, right? So let's move on. So read. You want to read, Abby?
Let a female read now.
Yeah, please go ahead.
Let a female read for us.
See, now you say I'm the one that have. Okay, it's not in your class. I've made that attempt before. But what you want to hear that is making female read for you is only you that understand, though. Okay.
So a female can read for us.
Yeah, please go ahead. But just one female.
It's not much sharing though.
Can you bring back the question?
Help us share the screen.
Okay. Professional accountants.
For professional accountants who are engaged in either tax practice, tax administrations are confronted with many challenges due to changing operating environments, particularly the disruptive while technologies demanding cutting-edge services for professional accounting firms. It is worrisome to know that majority of tax administrators in Nigeria are still carrying out their work manually. In a paper you recently delivered at a seminar organized by the Institute of Chartered Accountants of Nigeria, ICANN, it submitted that tax practitioners and administrators could make use of information technology to enhance their work and remain relevant in today's dynamic environment. Among the participants at the seminar was a principal partner of an old firm of chartered accountants who confessed to you that his firm was finding it difficult to satisfy its clients efficiently and effectively due to a wide range of issues, new layers of complexity and regulatory pressure. He has therefore approached you to organize a 2-day in-house training for his staff on technological tools, impact, and challenges to tax practice and administration required. Can you scroll up a bit, please? Can you scroll up, please?
I've done that. I've done that.
It's showing. Having accepted the engagement.
Identification and explanation.
Please, can somebody else complete question?
Required. Having accepted the engagement.
Use of technology-driven tools to tax practice and administration. Total 20 marks.
Sorry, which year is this one? Which diet?
May 2022, question 2.
Okay.
Hello, can you hear me now?
We can hear you now.
Sorry, I've been talking. I thought I didn't. I muted my, but didn't notice that I did. Okay, so now there are two ways to answer this question. The one, there are two ways before every man, sha. Well, the first one is to tell them you didn't present any paper and you're a child of God, you cannot lie. Abi? So that way, if you work, they are going to mark you for integrity. Abi? That way, you have 20/20. At least if you are preaching ethical value, you should promote the ethical value too. Why would they be telling you to lie? Abi? But then you can, it's just that the 20 can be from behind, so you have 0.2. Do you get? But now, if you want to have the full 20 marks in reality, so identify and explain 4 technology driven that tax practitioners could use to enhance their work. I've mentioned them before. So you are going to be talking about things around your social media applications, your cloud computing, artificial intelligence, data analytics. Right. So after identifying them, you explain what they do, how you think its knowledge will improve tax practices in Nigeria. Does it make sense? But before that, since you're preparing a paper, this is not a report. right? So you don't need to put it in letterhead. Just structure it in such a way that it's more or less like a presentation. You can, each of the points, write them legibly and then put colon in front and then explain what you are trying to say. Does it make sense to you? So the B now, the B is consolidating on your first one, saying that after you've identified and explained, you should mention their impact. So if you are what you are going to do is try to modify what your thoughts in A, explain it very well, and make it very nice, right? Then the C part is looking at the problems that those technology-driven tools are posing. Obviously, you know the problems. A lot of people don't even consider tax consultant again because everything they're supposed to learn is on social media. Although you are learning from social media at your own risk, those people are not qualified. But then, either ways, it's still a disruption you want to talk about. So that's basically what this guy is talking about, or this man was asking. So basically, he wants you to mention the 4 technologies, explain each of them. That's the first one. So meaning that for your identification, if you mention the 4, you have 4 marks. If you explain each of them, that your data analytics has to do with the use of spreadsheets, social media has to do with using applications like LinkedIn, X, Instagram, and all of that to communicate to tax payers, you have that 4 marks too. So the impact, you have your 2 marks for each point you raise on each of those things. And then challenges, that's the problems that they are posing to you. You have 1 mark for each of the problems. Yeah, Tunde, your hand is up.
Yes, I observed that you have mentioned this thing before. They are not 4, they are 5.
They are actually 6.
Okay, they asked for 4 here.
Yes,
Identify
they
and
are
explain
6.
4. Okay.
So to mention the 6 of them, you say artificial intelligence, social media, mobile application, cloud computing, blockchain technologies and cryptocurrency, and data analytics. Do you understand? But since they requested for 4 here, I limited my answer to 4, and you can pick any 4 that you're comfortable with, and you explain each of them and be fine. Yeah. So if you're writing here, write like professionals, meaning that make sure you express yourself, right? And I used to say for theory things, examiners don't know what you have in your mind. Examiner does not know what you have in your mind. There's one horrible experience. Although it's a good experience, really, but I can never forget my MG. It was called MG when I wrote my what you call it CSME now. It's called MG at that time. If you know how that paper is structured, for someone like me, I don't really like theory. If you notice, I'm not a theory person. I know the key points, but I'm not a person of many words like that. Really. So, but then the examiner wanted many words, and I was praying. And funny enough, the topics I know were not what was tested, but the things I don't know were what the examiner tested. And I paid for the exam. I can't come back the following diet. I'm only saying these stories for you to understand. But I knew that some topics I know risk, but just that I can't relate with what the examiner was asking. So it was the day my stepmother was very active. But then I just have to support I don't have to support my stepmother. So what I did was I knew what risk architecture was, and I was explaining it. I knew what risk assessment was, I was explaining it, but I don't know what the examiner was asking. But I was anywhere you see risk, I mention my own. Anywhere I see strategy, I know what is strategy, I mention my own, right? Anywhere I mention so at least he knows this guy knows it. Do you understand? He will know this guy read, because that his stepmother followed him to the exam. Believe you me, I scored 50. At least I didn't write the exam again. Do you understand? So I didn't support my stepmother that way. Does it make sense to you? So please, the examiner don't know what you have on your mind. He's not a mind reader. this is what I have in my mind. It's not in this exam. Write it anyhow. Stress that man. Especially for your theories. Do you understand? Out
Yeah,
of four,
yes,
if you're able to gather 1.5, the difference between 49 and 50 is 6 months.
yes.
After you qualify, you know all of them. Abi?
It's okay. Thank you.
Abi, do you get what I'm saying?
Yes, I do.
So- yeah. So that's it. So do you get the point here? Can you attempt, if you see this now, for instance, can you attempt it?
Yeah, the A part of it is clear, but how to go into deeply into that B, so that you not repeat what you have mentioned in A and B, that will look as if you are doing kind
So
of tautology.
the thing is that the examiner here is very funny. If you are going to be detailed in your A part, you would have mentioned what you needed in the A part is the summary of your B and C. So there's no crime in saying the same thing, but say it in different ways. Doesn't make sense.
Yeah, all right, all right, all right. Hmm.
Doesn't
No,
make sense to you.
yes,
There,
yes, yes. I just see what will guide, as in the, if you look at the A part critically is talking about identifying an explanation, identification and explanation.
yes,
The B is more of the impact of
problems. Oh,
mm,
yeah, the impact, sorry. And this is the problems.
the impact of the identified technology driving.
Mm,
So you just dive more into the impact.
yeah, exactly.
I haven't dealt with the identification and explanation in the A part. It's okay.
Yes. And then your C part is now talking about the problems. What the examiner has done here by asking you for the problems, please, what he wants is the problem and solution. We are not only problem identifiers alone. We identify and solve them. Do you understand? Does it make sense to you?
Yes, 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 yes. The C
Yeah.
is more of challenges, and just pick more of the challenges that you can find around this point. It's okay.
Yeah, that's basically it. So that solves the problem.
One we can see like one, it's okay. One we could still look at the whole thing is the solution and just overlays.
Yes, it's the right. But the idea is this is a little bit way easy because you have the idea already. So you have the foundation already. I believe you all understand what I'm talking about here. All right. So if you have question, please raise your hand. I'll be willing to answer. Okay. Nobody's raising hand, so we are all good at this point. Okay. Ogenetega.
Hello, good evening, sir. Thank you
Yeah,
so
good.
much for the effort. Uh, my network was very terrible when you were explaining this thing. I don't know if you could go over it again. I don't know. It's just an appeal.
Okay, you know what I'll do for you so that I won't have to drag others back. You can make attempt to watch the video or connect with me after the class. I will be willing to pick your call and then explain to you again.
Okay, sir. Thank you very
So that
much.
others would have value for, yeah, you're welcome. So that others will have value for their time.
It's
Right.
fine, sir.
So you're welcome. Joshua Adewonyi.
Hello, sir.
Oh, yeah, I'm with you.
Yeah. Please, regards to cross-border issue, can we have a question on it so that we know if possibility of it?
The base erosion and profit shifting, you mean?
Sir?
You mean the base erosion and profit shifting?
Yes. No, cross-border.
That's
Okay.
fine.
Yeah.
You mean the country by country reporting?
Yes, country
Not
by
cross
country
border.
reporting and cross-border activities, tax activities.
Okay, no problem. So let's do that. That's fine. Victor. Sorry, yeah.
I'm here.
You have a glimpse of what you are the one teaching today, just like you're not the one talking. So let's go to the guide. So the guide here. So let me look at 2021 question 6.
Is it November?
Anyone you pick, be fine. Yeah, November 2021 question 6. Okay. So right.
Can any of the
I'm
female
with you.
first?
So okay, Victor, you and female. Yeah. It's not me. Oh. It's lecture. I came to lecture. Oh.
No, our voices come when they're reading.
Okay. All right. So somebody volunteered to please read.
At a workshop on base erosion and profit sharing, organized by the Federal Ministry of
Profit sharing is profit shifting. No.
Profit shifting.
That's why.
By the
When women are reading this profit sharing, they will always see. I understand.
One of the
Please go ahead.
that is a corporate tax strategy used by multinational corporations to shift profit from higher tax jurisdictions to lower tax jurisdictions, thereby raising the tax base of the higher tax jurisdictions. Of the participant, an engineer, and the general manager of the leading manufacturing outfit based in Jersey, with head office in one of the European countries, was unable to understand it being discussed. He sought explanation from two other participants, yet he was not convinced. In getting to the office after the workshop, he decided to approach you as the company's tax manager explanation on the concept of BEPs, whether it will be worthwhile for the company in collaboration with head office to engage required. As the company's tax manager, he draft the paper addressing the concern of the general manager, particularly in the following areas: A. Distinction between base erosion and profit shifting. B. Techniques to base erosion and profit shifting. C. Takes action initiatives of the Organization of Economic Cooperation and Development against base erosion and profit sharing. The profit shifting program. This guy is correct.
All right. So I believe we can answer all of them. So let's start. So at some point now, you'll be like, this exam is not hard, Abby. You having that feeling now, Abby? Be fair, be fair. Who among you is having the feeling that the exam is not hard?
Amen.
No. So now, decision between tax-based evasion and profit shifting. So to distinguish it, you will just have to explain, right, that base erosion is a way of is a tax planning measure of trying to ensure that your tax base is moved from one region to other within the multinational corporation, while your profit shifting is trying to ensure that profit are moved from tax hostile environment, a tax planning tool to ensure that profit are moved from tax hostile environment to a tax haven. Right, that's it. With that, if you say that, you have your 3 marks. So what are the techniques of base erosion and profit shifting? We looked at thin capitalization, right? Who wants to mention others? Thin capitalization. Hybrid mismatch, right? Talk to me now. I've said it.
Trademark.
Oh, yeah, next one.
Hybrid mismatch arrangement.
Yeah.
Trademark.
Transfer pricing, trademark. Yeah. Then the 4th one.
Tax haven.
Putting assets.
Asset location without substance.
Exactly. Putting assets in a region without substance. So that if you mention that, you have your 4 marks. Right. Then 6 actions or initiatives. So you have the transfer pricing, risk assets, disclosure of transfer pricing. You're right. You have significant economic presence, declaration of country by country reporting, and things like that. So if you mention those 6 things, remember those 12 things I told you about. Hello.
We are with you.
So if you mention 6 of those things, then you have your full mark there. So this is basically how they test. This is basically how they test. Nothing more, nothing less. This is basically how they test. I'm sure you are familiar now with this, all right? Are we with me?
Yes.
Any question? Any
Please, can you
question?
explain? Please, can you explain putting asset in a region without substance?
Okay. So like I said now, a parent company, for instance, this is a practical example. A parent company would be in say give me an example of a country. We'll be in Slovakia, right? And then we have operation in Nigeria, we have operation in UK. But you notice that in Slovakia, they are not doing anything basically. What they are doing is just administrative stuffs, right? Then they have another office in Netherlands. They're not doing anything in Netherlands, but they would call that an annex, right? So you now realize that companies in Nigeria that are tax rate is 30% in Nigeria, right? So they move money from Netherlands and transact with a shadow company in from Nigeria to a shadow company in Netherlands, trying to move money to Netherlands that is not doing anything, from Nigeria that is doing a lot of things. That's moving assets. So creating assets without substance, creating assets in a country, they're moving money from an operational place to the asset region.
Thank you, sir.
Hello, can you hear me?
Yes, we can.
All right.
Yes.
So, have I explained myself? Do you need any further clarification anywhere? Now, if further clarification, that's basically it there. So let me give you the next. Can you hear me? So let me give you the next few minutes. The class is supposed to end by 11, and because it's theory we've done, I think we've achieved something good today. So I just want to give you a few minutes to ask questions at random from what you've studied. So can we go ahead? So please, to avoid being rowdy, just raise your hand and then we'll move on. So think capitalization, yeah, is trying to ensure that now, instead of the shareholders introducing equity, that's shares, to fund entities by way of shares, they decide to get debt to fund the entity. Maybe the shareholders, maybe from related party, but funding companies by debt instead of equity. So what you realize is that the company is highly levered, right? But highly geared. But at the end of the day, what is causing it is that the company is not ready to introduce equity into the business. Does it make sense to you? So that's where you see, that's where you get the idea of think capitalization. So companies having more debt than equity funding. Does it make sense to you? All right. So let's move on. So we have hands now. I've answered the question. Think capitalization. All right. So Modupe,
Please, can
Modupe.
you list out the 6 initiatives from the last question?
So they actually 13, right? So just a minute. Let me list them out. Yeah. Sorry, just a minute. So number one is sorry. So number one is that they try to address the issue of digitalization, right? Addressing the issue of digitalization. That's the issues arising from digital economy by introducing digital service tax. That's the first one. Number two is neutralizing the effect of hybrid mismatch uh, by introducing double taxation arrangement that helps both parties, right, and minimize the impact of cross-border trade and investment. Number three is that they control foreign country, right? Foreign companies, beg your pardon. Control of foreign companies, that's multinational corporations. Number three is limitations on interest deduction, limitations on deductions of interest on loan. That's example of 30% of EBITDA, right? Number five, sorry, is improving transparency by reducing harmful tax practices, right? Number six is prevention of tax treaty abuse. That's developing a model that addresses tax abuses across board. The number next is redefining the idea of permanent establishment to incorporate virtual permanent establishment. Then number 9 is transfer pricing, right, for your risk assets, right? Transfer pricing for your intangible assets. Then you have your data analysis and country by country reporting. Country by country reporting. I've explained country by country reporting. And then you also have multilateral arrangement or signing of multilateral arrangements. So those are the 13 actions basically. I believe they're up to 13 like that, right? Any question?
Thank you, sir.
All right, good. So, any other hand? I think we'll find all the people.
Hello, sir. I'm raising my hand.
Okay. Who is that?
Yes, sir. Good evening, sir.
All the people are great, please. Good evening, Chief.
All the people are yeah.
Yeah.
So, sir, my questions are on what we've done so far. First thing first, this interest deductivity rules that says when the actual interest paid is less than 30% threshold, so the company is not affected.
Yes.
So can we also infer that when the interest is more than 30%, so there will be a restriction to the 30%?
Correct.
Okay, that's one. So secondly, sir,
but now
I also need to understand all these rules around
Hello.
Yes, I can hear you.
It is important we clarify that it is 30% of EBITDA, earnings before interest, tax, depreciation, and amortization. So it's not 30% of accessible profit, it's 30% of EBITDA. That's what I thought to clarify. So in case you have anything, you have to compute your EBITDA and then do 30% of it. So basically that's your income, right? Less that's your total profit, right? What you have as your net profit or total profit, as you want to call it. So you add back your interest, add back your depreciation, add back your income tax provision, and add back your amortization. That's how you get your EBITDA.
Okay. So, sir, second question, sir. Okay. So, second question, sir. So I think I've been having network issues with the first two classes. So my question is around pioneer companies in the rules or the provisions in respect of pioneer companies in terms of provision made for capital allowances, loss relief into their period of operation. The treatment around the rules. So I don't know if you
loss
can just
is
do
relieved in the first. So
summary.
loss is relieved in the
So that we
first.
can.
So loss is relieved in the first year, right? So any loss that is not relieved in the first year of the postponement period.
Your voice is breaking, sir.
So I said loss is relieved in the first year, right? Any loss that is not relieved in the first year is gone forever, right? Asset purchase during the pioneer period will be as if to be purchased in the post-pioneer period. And then they will claim investment allowance, annual allowance, and initial allowance as the case may be. So the tax, the new business will commence really, and that will be the whole of. That's just the idea around it, basically. But since you said you missed the lecture, you can watch the video and then get better insights into it.
So
but
sir,
that's the value of the.
Okay. So are you saying during the pioneer period? So that implies that there is no tax during the pioneer period. So all allowances comes after the pioneer period.
Correct.
Okay. So this issue of minimum tax, when does it come? When does it comes in?
So minimum tax, pioneer companies technically would not pay minimum tax because they are applying commencement rule. And the exception to it is that, there's an exception to minimum tax that companies in the first 4 years of commencement are exempted from minimum tax. So by implication, right, pioneer companies are exempted from minimum tax.
All right, thank you, sir.
All right. So Benjamin Chuku, I've answered your question, Rashid.
Yes, sir, you have.
Okay, please mute your mic, Benjamin Chuku.
Okay, can I speak, sir?
Yeah, please go ahead.
Okay, mine is kind of clarification. The company income
Okay.
tax we solved on Dadinkowa. I was going through it and I discovered something from Pathfinder. The TET, it's like they charge it on adjusted profit. Not really adjusted profit, but what we call profit before allowable deductions from your
No,
earnings. That's
no,
like
no.
89,560. That's what I noticed from Pathfinder. But ours,
No.
we charged it on 54, I think 145. So I don't
That's
know.
after deducting after deducting donation, Abi.
Yes.
So that's what it is on. So it is. Although I've not verified what you've said, but it is after deducting because donation is an allowable expenses. So the only deduction that is not considered, the two deductions not considered in determining the accessible profit is only your loss relief and capital allowance. But donation is an allowable expenses, so it should be incorporated before deducting or before determining the tertiary education tax.
Okay. Then again, on this minimum tax, I don't know if there's any unique rule to it because still again on the Pathfinder, when I was trying to go through the theory aspect, I saw where they wrote that since there's no profit to be taxed, that there won't be any need for calculation of minimum tax. I don't know if you could throw
No,
more light on that.
that's incorrect because there are two reasons why you would submit a comment to tax, except, although I can't say totally that's incorrect, basically because of the exceptions. But if it's an ongoing business, right, and it's not agro-allied, then irrespective of what happened, whether profit or loss, you still assess that community minimum tax. Do you understand? There are three exceptions. So any of these three exceptions are not assessed minimum tax. Benjamin, please mute your mic.
No, I'm not the one, sir. I'm not the one. It's
Or who is that
Rofiat.
person?
It's Rofiat.
Rafiat, please mute your mic.
So it
So
means all companies are accessed on that minimum tax. They are subject to minimum tax.
except for these three companies. One, you have the companies whose turnover is less than 25 million naira. Two, companies within the first 4 years of commencement. Three, companies in the agro-allied industry. These are the three companies that are not assessed to minimum tax. So if it does not fall within the three brackets, then it should be assessed to minimum tax, basically.
Please, can you explain again? Like
Companies with turnover less than 25 million, companies in the first 4 years of commencement, and companies in the agro-allied industry are exempted from minimum tax. So if the company is not within that three company brackets, then the company is expected to pay minimum tax. So whether profit or loss, you complete minimum tax for that guy. So Benjamin, your assignment is check, is it a commencement company or is it an agricultural company or it is within the first 4 years of commencement?
So it's
So
this
Benjamin,
same
you want to check?
Dadinkowa. No, it's this same Dadinkowa we solved. I can't really see
So what's the
exactly
nature of the
how they put
business?
the statements. I think we'll have to go through the question again. Maybe another person could be asking the question while I try go through it again and see.
Okay, please be sure. All right. Rashid has advanced before already. You can put down your answer. I'm going to call you again. Joshua Adewoye.
So, sir, please.
Okay.
Okay,
Hello?
sir, please, just to be sure. Okay. Sir, hello, sir.
Yeah, go ahead. Go ahead.
So just to be sure, for hydrocarbon complaints, so the basis of assessment, is it actual year basis?
Preceding. Sorry, what am I
It's
saying? Common
preceding.
income tax preceding hydrocarbon actual. Again, common income tax preceding hydrocarbon actual. But
Okay,
now
okay.
your companies are going to
Actual,
have
all
to
right,
tax
thank you.
regime basically. Yeah. All right.
Hello?
Yes.
Hello?
Who is speaking?
Please,
Hello?
this is
Have you
Joshua.
this okay, Joshua, okay, I've called you. Please go ahead.
Please, back to, sorry for taking you back. Back to this thing capitalization. The excess
Yes.
of 30%, 30% of EBT.
So
If
it's
they are,
written off. It's not allowed.
no, the excess, is it write off or to be
That's what
considered
I'm
in
saying.
future?
Yes, so it's written off.
Okay.
So it's not interest carry forward, kind of. It's written off.
Okay. Okay. Thank you.
All right, you're welcome. All right. Omo Bukola.
Oh, hello, can you hear me?
I can hear you.
All right, thank you. Okay, my phone, I've got two questions to ask. The first one is under
Wow.
hydrocarbon, while the second one
Right.
is unrelated. But then let me start with the most important one first. Please, I want to ask the following transactions, whether they are allowable or disallowed under HTT.
Salaries and
So,
wages.
you said?
So salaries and wages. I want to ask for you now. Salaries
Oh
and
my
wages.
goodness, not like you've explained salaries and wages to me on the group.
Okay.
He said, as long as
Okay,
it's
that's
under
fine.
administrative expenses, it is allowed. Or if it is under administrative expenses,
Yes.
it's allowed.
That's
Yeah,
just the best way to attempt it.
yeah, I understand that. Then, secondly, allowance for bad debt, is it allowable or disallowed?
Disallowed. Disallowed. Disallowed.
Specific
Totally
provision,
disallowed. Everything disallowed
disallowed.
under the
Okay,
carbon. Yes.
okay. Then miscellaneous, if there is no additional information,
Is allowed.
allowed.
No, sorry. Miscellaneous. Miscellaneous
Yes, if there is no additional information backing it
is
up.
disallowed because it sounds more like a admin expenses. It is
Okay,
disallowed.
so we should
Yeah.
disallow it.
Yes, disallow it.
Disallowed. Okay. What of part of
But
revenue
it's allowed under CIT.
yeah, yes I am. Under
Yeah.
revenue computation, they might have some other incomes. So assuming we have like other incidental income, is it part of
It's
revenue?
taxable.
You
Yes,
said
it's taxable. Man. It's taxable.
okay,
It's income.
other incidental income, taxable. Okay.
Yeah.
Realized exchange gain, is it also taxable?
Yes, it's taxable. It's an income.
Realized exchange gain.
Yes, but if it is unrealized, it's non-taxable.
Mm.
Yeah.
Even in CIT, realized
Yes, same.
exchange gain is taxable
Ditto
also.
for yes, same for CIT.
You said?
Same for CIT. The same thing applies to the loss part side of things too. So
Okay.
realized loss allowable, unrealized loss disallowed. Realized gain allowed, unrealized disallowed. So for the loss side of things, if you have exchange loss on remittances and balances, it's also allowed
Okay.
because it's realized. Yeah, things like
Exchange
that.
loss on.
Remittances and balances
Okay. Exchange loss on
is
remittance
allowed.
and balances.
Yes, because it's realized, it's allowed.
Okay.
Yeah.
Remittances and balances. I'm coming up. Please, just a second. Allowed. Okay, taxable income. Okay, so loss on disposal.
Disallowed every time, any day. Disallowed is capital in nature.
You mean this or allowed? Loss on disposal.
Disallowed, not allowed.
Not allowed. Okay. Loss on disposal, not allowed. Okay. Then okay, I'll come just loss on disposal. Not allowed. Okay, then yeah, for the tax liabilities, under petroleum margin or marginal or
Don't bother yourself with other taxes.
oh, that's
Don't
fine.
bother yourself with other taxes. Just check this. Easiest cheat to it is check for the license they have in the question. The examiner will tell you.
Okay, that's
Go to the last page. You have it there. So OPL, OML, yeah.
okay.
OPL and marginal fee is 15. I used to mix it up really. It's 15%, and no, it's 30%. Then mining is OML, I think it's 15%. But I used to mix it up. So to avoid you mixing it
Someone
up, right?
okay. I was thinking someone shared on the group that mine petroleum prospecting list is 30%, marginal and
Yes,
the other one is
30%.
15%.
15%. Yeah. So what I'm saying is don't cram it,
Yeah,
right?
that's all.
The
Yeah.
examiner will tell you the what's the name now? The nature of license that guy carries, and then you just go to the other part and then pick it up from there. That's
Oh,
all.
yeah. Yo. Okay. Thank you. So for now, I
You're
think
welcome.
I don't know where the other question where I've written the other questions. I don't know where they are. Probably like in the next class, I'd have gotten more questions to ask. So let me move to the second question, which I said is unrelated. While you were doing some explanation earlier on, you made mention that like you're not a reading person, you're more of calculation. Please, I would like to ask, how do you like pass through your audit and assurance? Advanced audit and assurance.
Okay.
Yeah,
Because we are sharing the same problem, Abby.
kind of.
So for audit and assurance, what I do is basically this. What I did basically was that I asked somebody really to read to my ears, and then I was explaining to the person. So you read to me, then I'll explain to you. So I looked for somebody to just explain to you. Basically, that's how I was able to scale that course, to be honest. And that's probably how I did for most of my theory stuffs. That's why I still have most of those things off my head. So you talk, and I like writing in my own words. So once I read, even when I'm reading personally, I read personally, I write them in my own words to show that I understand what the man is saying. So that way I'm able to grasp it. To be honest, that's how I scaled.
Ah, okay, even that your techniques have had, but it's fine.
But there's no easy shortcut to it. It's just so basically two things I did. Somebody will read to my ear. I will explain to you what you're trying to read to my ear, or I read and then write with. And most of the things are practical, they're relatable, so that helps a little bit too.
Yeah, they have, but they've got a lot of listing on that. There's a
Technical
lot of
words.
explanations. I must say, I even preferred my CSME. That was from my MGV. I preferred my CSME, reading CSME set to auditing. But then,
I can relate. I
was
can relate, but you will pass. Don't worry.
man, I don't want to write auditing anymore.
Don't worry, you
Anyway,
can't write it again. Just read.
amen, amen, amen. All right, thank you so much.
All
That's
right,
just
thank
that.
you.
Yeah.
Yeah. Sunday, Babs.
Yes, thank you, Michael. What I want to find out is that the theoretical aspect of this thing, I think we have not done on it. Have you still have a class for it? Other than the
Yes, so I intend to my next class. I'm going to do what do I call it? Mining and capital gain tax. So
okay.
then that's on Saturday. So the next Monday, I think I'm going to do. So next Monday, I should be able to deal with the theory and then conclude, because I think the next Monday, if I'm not able to wrap up the next Monday, then Saturday I will be wrapping up everything. But I should have one more session with you to discuss the theory.
Okay. Okay. That's fine. That's good. Then the other aspect, we still have some other topic to deal
Yes.
with on
Some other
on
aspects. Some other aspects.
practical.
Yeah, some other practical aspects. So I do capital gain tax. I do mining. Mining has been consistent. Capital gain tax has been consistent. So if you're able to, if you check your 6, 7, number 5, 6, 7, you always find your mining around there. So other 2, 3, 4, if you look very well at your 2, 3, 4, you only see capital gain tax. I think only 2 guys they skipped it in the last few. And I want to do specialized business because it's in the syllabus but has not been tested.
Okay. What
So I
about
want to
double
do,
taxation?
yeah, I should treat it too, but if time does not permit, I think I'll just give you the idea of it because CIT is largely CIT, only the adjustment. So I can just show you the adjustment part of it, sure.
Okay.
Depending on how we're able to move.
So okay.
But don't worry, if you know CIT, Pioneer, and oil and gas very well, you're already, and if you know your theory parts very well, you're already there, and you're able to pick your mark for mining. To be honest, you will scale. Trust me.
Okay. Okay. Then the aspect of I don't know if I've mixed it. Class. This capital allowance that has to do with higher purchase.
Our purchase, right? So nothing serious. Maybe I will show you, but it's not anything serious really.
You know, this one is a general reflection. You can just touch, and
Okay.
no,
But it cannot be
it can come under 15. No, I can tell.
yes. All those things come under 59.
Hello, sir.
Yeah.
Hello, sir.
Yes.
Yeah, please. The loss on
Hello,
power,
No,
loss on
please
power.
don't make us make it rowdy. We speaking Joshua B. Your hand was not up.
Yes, sir, sorry. Joshua. So please,
Yeah.
loss on Pioneer. Is it net?
Yes.
Is it net of the Pioneer period or the total
Yes,
loss?
it's net. It's net. It's net. It's net.
Okay.
So if you make profit, if you make profit from Pioneer period and loss together, so it's the
Yeah.
cumulative, is the net loss you take to the post Pioneer, not the loss, not the loss for 1 year. So it is when you now make, if it's now net profit you make in the Pioneer period, you ignore it. But if it is loss, you will leave it in the first year only.
Okay. Thank you, sir.
You're welcome. So Basirat, give us one.
Sir.
Okay.
Okay, my question first is this you mentioned something while answering somebody's question concerning loss or gain on foreign balance or something like that. So I want to like put a practical example to you to know if I understand what you said well. So let's say in a bank balance, a foreign bank balance, they say $2,000 for 20. That's the balance for 2023. In 2024 now, the same balance remain, but because of exchange what's it called now? Exchange rates.
Difference.
Yes. So if it is gain, that is taxable.
Yes, that's realized.
Nothing, no money movement, nothing. So that is realized.
Yes, that's realized now because your value has increased significantly.
Okay. So if it is loss as well, it is allowed.
Yes. That's what I mean by loss on the. But the examiner will write it explicitly to say remittances and balances. Exchange loss or gain on remittances and balances, so that those are realized.
Okay. Okay. So dividend is when paid, it is not recognized as expense, but it reduces your say retain any or bank balance.
So it reduces both. That's the accounting side of things.
Yeah.
So what you do is you debit your retainings and credit bank.
Okay.
Are you asking about the tax implication?
Yes.
Okay. So the tax implication is that when you have dividend paid, right, what you need to do is not allowable. Let's agree on that. That is not allowable. But what you do in that case is that you have to do 30% of giving the tax rate 20% or 30%, as the case may be, on the dividend paid, right? And compared to the actual CIT. So whichever is higher is what you
Is what they pay.
determine exactly is what is
Is
what will
what
now
you
be
have to
your
pay
exactly as the
as
liability.
CIT.
Yeah.
Wow. Even when it is not even when it is added back.
Added back as
Sorry, even when it's not recognized as an expense, like it is not allowed.
it's not
So
and it's not disallowed. Was never
yeah,
disallowed.
so it's just being used to compare that you are not paying
Yeah.
lesser tax
Yes, so you're not paying less because it begs the question, where did you see the money? You didn't make profit.
to pay if you are running at a loss.
Exactly. Or if you're running at a lower profit. So where did you get it?
There's one third question now. I can't remember.
It's not coming, Abby. Wait till it comes.
Okay.
All right.
Yeah.
Yeah. Olive.
Yes, sir. Good evening, sir.
Yeah, good evening.
Sir, please, I got a little bit confused while I was reversing petroleum profit tax for
Petroleum profit
November.
tax is no longer
Okay,
examinable. Okay.
PIA. I want to make reference to the questions we solved in class. Okay,
Okay.
for 2024 question 1, that is Colony Nigeria Limited. The pioneer period there was 1st of January 2016
Okay.
to 31st to 31st December 2018. So the
20.
yes, so the post pioneer period was 1st of January 2019. So I got a bit confused when we now started computing for our capital allowance. Since our post pioneer period was 1st of January 2019, I thought that the tax year now was supposed to be 2020.
Okay.
But
Okay. I would imagine you missed the class. You just got the solution. I explained in that class.
but I
But
don't know.
then I will explain again. Right. So the idea there is that as at 2019, it was the old rule they were using, and you have to apply commencement rule. Abi?
Yes.
Yeah,
I
so
think
that's
that's
it.
why I compared it with the
The
other
new rule.
question one
Exactly.
with question 1. I discovered that there we use the new commencement rule because the post pioneer period ended in 2021, and then when we started our
Exactly.
capital.
We did 2022. Makes sense. So 2019 was old rule. That's why we did 2019 after your basis.
Okay. Oh wow. Thank you so much. This is so
You're welcome.
great.
Yeah, Silas.
Yeah, good evening, sir. Okay,
Good
sir,
evening,
my
Chief.
question is on taxation of non-residents. Sometimes I used to get confused, mostly when it's, dealing with a subsidiary, foreign branch, and, Nigerian company. I don't know if you can just throw a little light on that. Taxation of
I didn't get you. Hello.
I don't think he's longer on the call, sir.
Okay. So let's move to somebody who is on the call. Who else have I not attended to? Have I attended to everybody?
No, sir.
Okay. Sorry, you're done.
Good evening.
Yeah, good evening,
Can I
Chief.
go on?
Yeah, please
Okay.
go ahead.
Mine, I have a comment or a request, and then I need clarification on something. Making reference to our assignment that he gave us, I shared mine, even though it was past 7, so I felt, okay, maybe you were preparing for the class, so you couldn't respond. I would appreciate if you could check it and just let me know if I made any mistakes anywhere so that I can take my corrections. And then I also
Okay.
asked a question after dropping my attempt. I wanted to find out, please, can you shed more light on this issue of the cost price ratio? I don't really know it's, I don't know whether to say relevance or how is it used in the
Okay.
computation.
So I solved illustrations illustrating the cost price ratio. Five more
Yes, sir.
people here.
I was in
I've
class.
raised. Yeah, you were in class, right?
Yes, sir, I saw it, but I still don't really get it. How is it
Okay.
used? What is
So
the
but
application?
you know how to compute it. That's the first thing.
Yes, sir.
Okay, good. So now makes sense. I think our problem is solved. So the idea there is you are comparing that figure you have there, right,
Hello?
with your maximum allowable expenses, which is your restrictions, 5% of revenue. So you are picking your whichever is lower as the total expenses that will be allowed eventually.
Okay.
Do you understand? So that's what you're trying to achieve that way. Does it make sense?
Okay, sir. So if I understand, that amount that we calculate as the restricted to 65%, if it
Yeah.
is higher than, is it, will I call it the B part now, after calculating
Exactly.
all those
If it is lower, you need
allowable
to say.
expenses and all that? If it's lower, then it goes. But if it happens to be
Yeah,
higher than
exactly.
that amount we calculated at 65%, then we pick the 65%.
Exactly. That's it. That's how it works.
Okay. All right. Thank you.
You're welcome. All right, Victor. Victor.
Okay, sir. My question
First,
is on.
let me thank you. Sorry to cut in. Let me thank you very much for saving me tonight. God bless you. I appreciate
Thank you, sir.
you did a good job. Yeah.
Thank you, sir. So when you have will I say tax return value or an amount in pioneer in post pioneer, I'm aware
Yeah.
that you treat the capital qualifying capital expenditure in the post pioneer.
Correct.
Then the initial allowance will also be computed.
Correct.
So when you are computing when you are computing CIT, where you have capital allowance, qualifying asset,
Correct.
if you have tax return value like the way you have in that pioneer, you don't treat initial allowance.
No. Now, for a typical pioneer question, I wouldn't want to believe that what you have is tax return value in the question.
Okay.
Possibly you mistook the question to be a pioneer question. In that case, what you should have for the question is the cost of the asset purchased during the pioneer period is XYZ amount, not tax down value. Because technically wrong to put it in the question like that. Possibly the question is an ongoing business.
There is an amount.
So I'm asking again, is it the question you're talking about? Is it a pioneer business that is fresh or is an ongoing business?
Is a pioneer business. So I
And
was looking at
the
the
examiner
finance.
gave it tax down value.
So is the amount like the amount for let's say pioneer period. So when you
Okay.
are not computing it for the post pioneer period,
Okay.
you treated the initial allowance.
Yes.
So but in CIT, when you have like an amount like that, do you treat the initial allowance? Because I assume I'm aware that
Okay.
when you
Okay.
have,
Okay. Okay. I think I get a question now. For so you are clear that for PI pioneer you don't have taxes down value, you have amount, you have the costs.
yes,
Okay, so you're asking now about CIT.
yes,
Okay,
because
so
I
for
discovered
CIT,
that we treated initial allowance in pioneer, but in the CIT, there was
we
no
didn't take
initial
it.
allowance for old assets.
Correct, correct. So if I think I get your question now. So that way, what prompted us was that man, initial allowance is just once in the lifetime of an asset.
Yes.
In the first year, the asset is put to use. So now, two things here. the guy told us that the amount is the taxable value. Taxable value is cost minus allowances, meaning that initial allowance has already been claimed. Point one. Does it make sense to you, Victor?
Yes.
So you don't claim it again. That's double claiming. You are giving that man bonus. You are dashing him money.
Okay.
Yeah. That's
Thank
it.
you. Thank you.
You're welcome. All right. Yeah. So now, Silas. Olive, is this from the previous? Sorry, just a minute.
Good evening, sir.
Olive, is this from the previous question, or you want to ask another one?
Okay, sir. Yes, sir. The question I'm
Okay,
asking
Silas.
borders on taxation of non-residents. Most times I used to,
Okay.
get confused when it's relating to subsidiary, foreign subsidiary, and Nigerian branch. I don't actually know if you can just throw a little
Okay.
light on that.
Hey,
Taxation
let
of
me get
non-residents.
let me
That's
get
my
there.
question, sir.
Let me get there. Although the slight difference there is just the issue of personal representative. But let me get there first. It's better I get there so I don't move faster than my shoes. All right, thank you. You're welcome.
Okay, no problem,
Alexander.
sir. Thank you, sir.
Okay, Abiodun.
Hello, sir.
Joshua.
Yeah. Please, concerning
Yes, I'm
the
listening.
issue of proration of capital
Yeah. Annual allowance, you want to
annual
say?
allowance, under the annual allowance on the capital allowance.
Okay.
Now, is it
Yes.
applicable to Pioneer too?
Yes, of course, if the basis period is less than 1 year.
Okay. Like, let's assume that the asset is bought maybe a month to the end of the year. So only 1 month will be considered.
Correct.
Now, the balance, by the virtue of a asset year on the maybe 25%, which is tantamount to 4 years.
Correct.
After that year tax year, the following year,
Yeah.
the other year, is it going to be plus another 11 months?
No,
Balance will be
no.
prorated into 3.
Exactly.
Please kindly clarify on that for us.
You've answered already now.
Okay.
You answered.
No, I have two options. Is it going to be plus the 3 years plus another 11 months? Or
No, I said
the
no. So
okay.
is taxable value divided by n minus 1, n being the number of useful life of the assets, which is 4, 1 being constant. So invariably what you have is taxable value at the end of year 1, because the idea is the 1 month is assumed to be 1 year.
Okay.
So you have to adjust that taxable value down to the number of months in the next year, so that at the end of the day you don't have an excess.
Okay. Thank you, sir.
Do you understand?
Yeah, clear, sir.
Yeah, okay,
Thank
good.
you.
You're welcome. So yeah, Silas, I've answered you. You have another question?
Yeah, sorry, sir. You called Alexander. I quickly want to ask a
No, sir. No other
question.
question. Thank you, sir.
Okay.
Okay, please.
Sorry.
Yeah, I called
I
you.
was
You're
trying
not
to
online.
unmute. Sorry about that. Okay, just a quick one.
Okay, no problem.
Under hydrocarbonate, salary and personal emolument, is it allowed or disallowed?
See that salary, you don't they give us a dip for this class. So let's get something straight. Admin expenses is disallowed under PIA. So, but if it is salaries and wages, right, you can trace it directly to oil field guys. Do you understand?
Okay.
So it is allowed. But if it is under admin expenses, it is disallowed.
Okay, because the one I saw for November, I think November 2024, it was not traced to admin. It was just salary and personal emolument. So I was a little bit confused. So I allowed it.
So the point still remains that if it is traced, that's just the basic way to answer you. So if it can be traced to admin, right, it is allowed. If it's not traced to admin, it is disallowed.
It's allowed. Okay. Okay.
Yeah,
Thank you.
you're welcome. Basirat.
Thank you. Sorry, what does that trace to admin means? Like, will it be expressly stated?
Yes, yes. So like the one I gave you now, you see admin expenses, personal salary and personal emolument was there.
Okay.
Yeah, so that's it.
Okay. Or if it is just standalone
No, so if it is
salary.
salary, so the to technically put it, I just want to be safe, right? But if it's salaries and wages, then wages, but that personal emolument itself, technically put, it is still admin expenses, personal emolument, because that way you are looking at a lot of stuff, gratuity and all of that, and pension. So it's still admin related, kind of, if it is personal emolument. But if it's salaries and wages, I think that's pretty much straightforward and that should be allowed.
Okay, that takes me to staff costs now. Staff total emolument. Is there like a restriction? Is there like anything that is being done to tax that is not allowed? Say for example,
Because
aside the salaries or wages, aside the pension, aside the health insurance, say they go for training, like which is that involves traveling, any paid training, stuffs like that, or other allowances like maybe house. I know there are some restrictions that like it should be 50% or 100% of basic pay and stuff like that. Is there any other staff emolument that is being disallowed, or is there anything
so
like
is
that?
the disallowed portion is the gift to staff, basically.
Okay.
So that's what is disallowed. So if it is gift to staff, it is disallowed. So anything other than that, at least the one I can think of for now is allowed. But to staff, right, is disallowed.
Okay, so can it, if it is not tagged gifts, let's say maybe birthday, something, staff with children, they give the kids
It's
maybe
still disallowed.
allowances for.
It's still disallowed. All those things are saying is, but that birthday service is more annoying than gifts.
No, for kids now, it's like a staff now, they say we are going to be paying this amount from your house rent. That is one. Two, staff with kids, we pay for say their extracurriculum
I mean,
activities.
there's CRA now. There's CRA. Consulted relief allowance has addressed all of that. So you shouldn't bring that burden to the company.
Okay.
Abi?
So what if company wants to do?
And they can do, right? So if there's a way you can coin it that it won't serve as if you are doing just Santa Claus, then that makes sense. But if it sounds like Santa Claus kind of thing, like those, then it's disallowed. Does it make sense?
Okay. Thank you.
Yeah.
I please sorry, just a quick one. The admin you refer to, is it general admin?
Yes.
So are you saying that it can
Okay.
if it can trace to general admin is allowed for salary?
Yes, for PIA. You have to put that for
Mm,
PIA there.
mm.
But you told us that it is allowed based on the question you asked us to solve.
Wait, yeah, salaries and wages is allowed. Maybe that's what you asked.
Yeah.
And I said salaries and personal emolument is disallowed.
Okay.
Does it make sense to you?
Yes.
Okay, sir.
Okay, that's it.
Sir, please. So,
Yeah.
I want to ask a question concerning capital gain tax, especially on the initial allowance.
Okay.
So, the last
Capital
explanation you
gain
gave
tax, the
from the
capital
last person that
allowance.
asked the question on annual capital allowance. Yeah, capital allowance. Sorry. So, capital allowance. So, for initial allowance, irrespective of the number of months,
Exactly.
it will be
Yes.
claimed in full. Okay, okay. That's good to be sure. All right. Thank you.
Okay. All right. So sorry, a general note now. I just confirmed again. Personal salaries and personal emoluments is disallowed. Salaries and wages is allowed. Wages being that it can be traced to members in the oil field, that workers in the oil field, right? Then personal emoluments in that it is admin in nature. Does it clarify for everybody?
So, sir, for this PIA that you are talking, is it for both if it is prospect or mining, regardless?
Yes.
Okay, so this salary and wages thing stands if it is
Yes.
either mining or prospect. Okay.
Exactly.
Thank you.
All right. Yeah, today.
Yes, Michael, when are we ending this? Because it's almost 12 o'clock.
Yes, it's the question that is delaying you. I'm supposed to have ended.
There must be an end to things.
I should have ended. Really.
Some people will just be awake because they don't want to mix some things. But if we have time, we will know that this is the time. Are we ending it tomorrow morning?
Okay. Okay, so I think I will attend to just 2 more questions. My next 7 minutes I'm off here. That works.
It's all right.
All right, thank you. All right, so Benjamin Chuku, you were finding out some things. Have you seen what you're finding out?
Yes, sir, I've seen it. I think I'm fine now. It says,
Okay, you're
following
fine.
from above, the company has zero total profit for the period under review. Section 13 of Finance Act 2020 stipulates that any company that falls into this category, zero or insufficient profit, has to pay a minimum tax.
Exactly. That's what you read.
Yes. So I misinterpreted it. I thought they
Oh,
said it does not have to. Okay, but I'm fine now. Thank you.
okay, that's fine. All right, Rafiat. Okay, Alexander. All right, thank you very much, everybody.
I think you've answered my
It's good
question.
having
Thank
you
you so
tonight.
much. Thank you.
Okay, you're welcome. All right, it's good. Yeah, it's good having you tonight. Good night, everybody.
Thank you
Bye.
so much.
Good night, sir. Thank you so much,
Yeah.
sir.
Good night, sir. God bless you.
Bye. Have a wonderful night.
Mr. Victor, you can end the recording. Oh.
Sorry, I was muted.
Yeah, you can end the recording. We are done.
Okay, who is now save it? How?
Sir?
If I stop it, who will save it?
I think when you stop it, there will be a place to save. Just allow it to load completely.
Okay.
I don't know. Just try it. End the recording, then you wait for it to load completely. Then you can save it on the drive. Anyway, sha.